Volume profiles are another tool we're going to cover in this series of indicators used by chartists when trading in the stock market. Even if you've been trading for a while, these simple and short refreshers can really help your trading. In our last session, I explained some of the key concepts of volume and a few of the various trends that emerge throughout a trading session. Using a volume profile, trader can assess market analysis to identify where price trading activity took place and how much or volume trading took place at each price level. So let's take a closer look at the volume profile and explain how it can be used to identify trade entries and exits. Here's what it's going to look like on my charts. We will also note all of the previous indicators we've covered in this series so far will remain on our charts. Many traders are used to viewing volume as a histogram beneath the price chart, just like this. This approach shows you how much volume was traded during each price bar on your screen, and typically it's a time-based bar, such as a 15-minute chart. These are 15-minute bars, so during this bar, this is the amount of volume, etc., etc., etc. Now, while this is a really popular way to analyze volume, knowing where the volume occurs in terms of price rather than just time can be so meaningful and can really give you more additional useful information. And we can see this when we're using a volume profile. So a volume profile is plotted on the vertical axis of a price chart, and it does just that. It shows how much trading activity has taken place at each price level touched throughout the trading session. Now, why is this helpful to traders? Because a volume profile points out the prices that have been favored by the market, such as here, and those that have been ignored by the market, such as up here. And this can definitely give you a clue about where price is likely to go in the near future. So there are several parts to a volume profile, as shown here. I'm going to explain for you. There are two red lines, one straight moving line. That is the point of control, or POC. There's a second red line that moves, and it is live. It moves actively with price action throughout the day, and that's called the developing POC. I typically will not keep the POC up on my chart. I can see where the most volume took place. There's no need for that red line to go through my price action, but it is very important to see the developing POC to know if we're developing more volume higher, price action is getting more comfortable as it remains up high or lower. Also, you'll notice the bars over here, the red and purple are selling volume, and the green and blue are buying volume. And let me explain for a moment that the green is not overlapping the red. This red part is as much selling as is the amount of selling that's happened in this bar, and the green is the amount of buying. And it gives you the numbers. There's 825 contracts here sold, and 2.32 thousand contracts bought at this price right here on this chart, which is 2030. Now there's a value area where 70% of all of the volume for this entire chart has been traded, and that's within these two blue lines. So anywhere in between these two blue lines is where most or all of the volume has been traded on the chart we're viewing, and that's shown here as well with these different change colors in the bars equal within these two blue lines. That is the value area where the price has been considered at a fair value by the market. So how can we use this information to find the best trading opportunities? Well, as you see here, I've shown that we've got price action increasing, and we've got volume time-based decreasing as price is increasing. So volume decline as price increases means that people didn't really favor this rally. It's not a strong rally, and the chances of a reversal or turn down are very high. Very high, because there's not very many buyers or sellers. They don't like this rally. So question being, where can you set your price target to? How do you know where it's going to drop to, where it should drop to, where it's likely to drop down to, so that you can get out with the most profit on your trade? That's where a volume profile comes in handy. We see this moving up. We know that it's not a favored move. It's weak. So we know that up here, this price action is getting no buying and selling volume of any real importance. So it's going to have to revert to the mean, or the POC and the value area. So we can set a price target for the top of this 70 percentile range. We know like all of the volume for this time period has been traded right in this area. So we can set our first price target to short this from way up here in no man's land down to 2029, 2030 to get back to its volume area. Now, volume is an extremely useful tool, and as you can see, there are many ways to use it. There are basic guidelines that can be used to assess market strength and weakness, and I believe volume is a very strong one. And as well, you can also check if volume is confirming a price move or signaling a reversal like it is here. Indicators can be used to help in the decision process. So, we see just based on this volume chart that a reversal is being called by volume. We look up here at RSI, we're extremely overbought. So yes, that needs to revert and reverse. Indicators can be used to help in the decision process like we just did. But in short, volume is not a precise entry and exit tool. However, with the help of the other indicators we've studied, entry and exit signals can be created by looking at price action, volume, and a volume indicator. So this should give you a basic understanding of volume profiles and how they can be applied to an effective trading strategy. And this is a very important indicator that gives professional traders signals for making the right decisions on both sides of the market. And this week, we'll continue to move through several new indicators to help you learn how to improve your trading using volume on top of the momentum and strength indicators we've already covered in this video series. If you enjoyed this video, please feel free to come to greattradingtool.com and check us out for a noise-free, friendly, and productive and affordable trading environment to share charts, learn, and trade with other traders. We have hundreds of traders actually. Please feel free to try a 5-day free trial, and then it's only $7.99 a month. Thanks, guys.